Wednesday, October 18th, 2023. Right now it's 9:10. Market haven't opened yet. Looking at the quick overview. Market slightly flat, slightly down. Nasdaq is down 0.75%. News came out. Morgan Stanley bit estimate on trading, but share dips as wealth management disappoint. Yeah, so as the earnings is always what had happened, right? What's more important is forward looking and what have to take place. And are they going to continue doing better, or are they going to do worse? It's always about forward looking. This is why it's trading down, even if it beats earning. Make perfect sense. It is down 3% in pre-market. Yeah. So earnings expectation is 1.28 cents per share, and it bit it. This came out earnings per share is $1.38 versus 1.28 estimate. Revenues a little bit better than expected. However, the profit fell 9% from a year ago. So year over year is down 9%. Right, so revenue grew, but profit is less. That means, although they're making more money, but at the end of the day, they're actually not making more. You work harder, you earn less. That's not good, all right? What important is that the bank's all-important wealth management division generates $6 billion in revenue below estimate by more than 200 million. So that is their bread and butter, wealth management division, and it became less. So even it beat revenue, it beats expectation on earnings. At the end of the day, is they're either losing market share, they're not making as much. The profit is shrinking in that sense. So this is why people are selling the stock. So you got to look at it in context. That forward looking, going forward in the next to all the way to next earning next year, the environment for it to make a profit at the end of the day is about making money. Right? So, and here's the other thing. Well, because of the high interest rate environment, you just buy bond and you got very nice, good return. Why take the risk on a stock that is not making better and better return in that sense? Right, so that's why, just a quick explanation why it beat earnings, but people are still selling to it because of the guidance, because of what have taken place, because it's even they work harder, but they're not making as much profit. Yeah. So all that comes together. Yeah. Let's move on. Today, yeah. So pre-market, you have UFC, USB, US Bancorp, well, XC, and then apply templates. They have to come to office 3 days. We'll take severance package. Okay. Yeah. Whatever. Don't like it, just go to another firm. Depending firm doesn't. A lot of jobs doesn't require that strict policy anyway. I think a lot of time people are just sitting in the office daydreaming. It's not being productive. So it goes both ways. Depends on the type of work you do too. But if it's more intellectual, you want to give people the. Matter of fact, Harvard study it's been proven that major decisions for companies are made outside the office, especially the profitable ones. So, you have a bunch of middle management that really in the firm doesn't know better. They are the one who also daydream and create things out of their behind. Yeah. So, yep. I always say, just move on. Doesn't care. Yeah, doesn't affect the stock price. Yeah, to me, yeah, not playing that. Okay, so quick look at the thing here. Here, crude prices surge. Okay, because what's going on, the Middle East tension continue to build. So let's go right to the chart, right? Let's look at Tesla has a little inside bar inside this. It came back a little, but it's still inside the wedge. So let's go right into oil, right? What is oil doing? $87 barrel, and oh, look at this upside down hammer. So it's going to be interesting to see. As I said, have this upside down hammer, but right now the market is not open yet, so we'll have to see. Pre-market, yeah, right here. Now it's going to gap up, closing this gap. Alright, so erase this down move. Alright, so this, so it's right at where resistance becomes support. Yeah, it's gonna open right there. Let's see what it's going to do. Yeah, there's a false hammer in that, and the Middle East came in. Now, important part is the MACD and the histogram. Histogram is not turning green yet. I want it to turn green. Right? So if we took a trade here, it's too early. It's a turning point, but the MACD have not converged or crossover yet. But MACD more, I use it more of a exit after entering position to see the continuous momentum. Like right here, if we have enter here, right? Enter here, the breakout after this break up. The crossover take place afterwards, so it's a lagging indicator. Most moving average are lagging indicator. So moving average, convergent divergence are a lagging indicator. So it's good as to use as an exit because it will turn way right. Look at this crossover, and then it color change on the histogram. Right? So that signifies, oh, better get out around here. If you get in here, get out here. Nice. Play this breakout, break here, enter, right, and get out here. So that's one way to play it on the crossover. So on this, you see the momentum really dying. Ideally, of course, you want to get out here if you experience a spike. But as you see the momentum start coming in, start compressing, you're looking for exit point in that chart. And once it cross over, yeah, you probably want it. You will end up getting out here actually at low too. In that sense. Now this is an anomaly that doesn't count, and it starts dropping, right? So you gotta. This is a noise. These two green bars noise. The move is coming in, and it dropped like this, right? And the MACD caught it perfectly in that sense. It changed from green. As a matter of fact, these green is one weak. It doesn't have a large green bar, right? Wow, this big bar down give you a really huge bar on the histogram too. Okay, so that's okay. So yesterday I didn't upload a video, but I was watching Google because it did this. It gave me a hammer. Right? A crossover came back, and then it finally gave me a hammer. So I'm supposed to enter this trade. I was thinking about enter at the end of the day. But hell off on that. Hell off on that. Why I didn't enter like before the market closed on that when the hammer formed is because of Heiken Ashi. Heiken Ashi had a slightly different picture for me. And ahead we're going into earnings. Right. So it's picking a picture. It's a doji style indecision, right? You have a small bar in the middle, long tail upside and long tail downside, which means seller comes in, sold it down, buyers comes in, bought it back. Right? Bought it all the way up, and then eventually the seller come in and push it back down. So it's just right in the middle. Just as nothing happened. It opened and closed at almost the same place. As indecision, a doji style is basically indecision. So I can see that going because of earnings. This is the reason why I'm holding off this trade is of uncertainties. I was going to just sell a put and buy the stock. but the Doji Star uncertainties, and on back of the market yesterday, right? The market was up huge yesterday. Relative strength wise, if it's up like this yesterday, of course it did came back down. At one point it was up 200 something points on the Dow Jones. So that's why markets have a up day while Google have a doji style of more painting me as uncertain pictures. Right, despite have a doji style. Yeah, but this is Heikai Ashi again. It's Heikai Ashi. Nasdaq is not approaching, but this is Heikai Ashi, which is a smoothing. Right? Give me a trend. The Nasdaq have 3 down day on the Heikai Ashi. It's not nice and green on Heikai Ashi, so it's not trending. Basically, it's not trending, and Google have that hesitant. You have it does give me a hammer, but the border market, right, it is relatively tame. Right now today is going to open at the low, at the low of yesterday. It closed out here yesterday on Nasdaq at QQQ, but it's going to open at where it opened yesterday. So this tell me that there's no buyer, there's no seller. It just continue to really more of a sideways movement. Yeah, the stocks even pre-open a little lower, but who knows? It's maybe working on order. What I want to see again is stocks and QQQ break through this line, this this line, this resistance line, this top resistance line. I want to see it up here. I need the sector, I need the bottom market to give it the backwind, right, to help push it up. So the histogram it already changed in that sense, but yeah, that's the odd part. You do not blindly take a trade. You have to look at other factors too. Of course, if the market break up, it will break through this. It will do a clean break. This break, it's not a clean break. The problem is it broke up and it came right back. You have to decide it could be upside down or decide next field buy. It's going to fight at this level because the market is not helping it. And it's coming off this MACD, a divergence in MACD. Matter of fact, if you look at this, the divergence still continue. This mark it make new high, but let's extend this. This divergence is still there. We still had a diversion in the MACD. That means the momentum is not there. Okay, this is why I did not initiate the trade. Very important to read other pieces of information, not just on the candlestick alone. So this lesson is very important. Yesterday I was going to upload a video after I opened the trade. That's why I didn't upload video. But at the end of the day, I was going to open my trade pretty much 10-15 minutes towards the end of the day as it displayed this. But I was looking at, wait a second, my MACD still has this divergence. It's not ready yet. And I will switch to Heikai Ashi. Right. On the border market, it's still under these, and Google gave me a doji star, and right. So in that sense, the Nasdaq has 3 red candle. It's not a nice green where it's going to carry upward. While it will lift the whole sector. It will lift the sector, the stocks. It will lift the Google. When you have market behind your back and sector behind your back. So it's not ready yet. It's not ready to go ripped up. Right, so I will continue to watch and wait. That's how it is. That's how it is. It's when it's not ready, when things are not completely aligned. Of course, when things are completely aligned, you have to signal, take the trade. And it's going to be a breakout trade. It's not going to break out pullback. Chances are it's going to break out trade. And then you might pull back and then you add in a position to it, your second leg to it, in that sense. But I'd rather have the market behind my back than just stuck along in that. So dropping the Heiken Ashisha back here. All right. Yeah, it's fighting at another level. I have my biggest problem is this diversion. I have this diversion, and that worries me. It did not make new high, so momentum is not carrying through. So I have to be very careful. I still have a divergence in the MACD. Even I have a small Thor's hammer that did not signal I should go in yet. Yeah, I rather it run, pulls back, right, and then buy around here. And I missed this run, missed because I didn't enter this trade. Then take this trade now, and then it's gonna close back down. Yeah. So no trade yet. That's what I'm trying to say. No trade yet. I still have to observe. Yeah, I have to be patient. Trend falling is a lot of false signals. You don't want to get chopped up. Yeah, Apple. They all need to fight about this resistance line. The problem is they're not. The Nasdaq is not about that resistance line. Meta got a double top and came right back, collapsed right back. Right now it's fighting below that level again. Same story. You have these nice Thor's hammer. Yeah, and I didn't take the trade on that yet, but because basically the market is not behind my back. I don't have the market behind my back. All of that. So I always. So Meta, right, on Meta, when did the doji start take place? The doji start take place. The most recent one is right here, right here. Wednesday, September 27. So relay that back to QQQ on Wednesday, September 7. September right here, 7. Right. Is a double bottom right here. Okay, let's take out the other bar, right? So Wednesday, September 7, we have this on the QQQ. So should I enter the Meta trade because just on the doji star long? Right. No, because that's not a continuation of uptrend. The MACD came down already, right? Although the stock has came down. Okay, this trend, right? It invalidates this whole thing. Invalidates this breakout basically, right? But it's not ready to run yet. I really want to see it broke this double top line at that time. We still have this line which is down slope double top. The problem is a down slope double top. Okay, that's September 28, September 27. Right? So we have this doji star on the market that day, and Meta made this false hammer. Okay, Meta made a false hammer that day right here, and I marked it. I marked it as okay. I see this clear false hammer, but I don't have the market behind my back. Market at a doji star. Do I take the trade? Histogram compressed, so it's slightly red in that sense, and it was a hard choice. Do I take the trade? And at the end of the day, I said, wait a second. The bottom market is not trending yet. Matter of fact, as a double bottom came below, it's not ready to run yet. I want a clear trend to establish before I go in for continuation of a trend. This is not a continuation of trend, even a false hammer. It's a downtrend. Look, it's a downtrend. You make a nice run and then you go into a ABC correction pattern, and it's a downtrend, lower low on the peak. Regardless of MCAT, lower low on the peak is a downtrend. You need to break back up and you validate this line first before I would consider it an uptrend on the bottom market. So if the bottom market is not behind me, I'm not taking trade yet. That's going to be a lot of false signal. I wanted to break up nicely, right? Re-establish a new trend, and look for false hammer. I don't look for false hammer on the other side when it's coming off, and try to go bullish on it. And very important. This is a very important lesson today. Yeah, this is why I'm not taking trade on Meta, and I'm not taking trade on Google yet. I don't have my market behind my back. Right. Okay. I'm trying to keep my lesson shorter nowadays. The market open, but it doesn't matter. We'll see what it does, and if there's any trade. But I doubt it, because the market, I'm waiting for the market to show me an uptrend again, first of all. Then I will start selecting a stock. Okay, the polar market, the index are very important. First the market, and then the sector index, and then the stock. With the market behind my back, the sector behind my back, those are good trade. Then have a lot less false signal in trend following. The problem for trend following is that you're going to take a lot of false signal. It's going to take a lot of small losses on that, and you want to avoid that. To avoid that, you want everything behind your back. You want to have support behind your back. You want sector. You want the polar market. Right. Of course, that's in the perfect world sometimes. Sometimes you take a little more risk, but right now we have this downtrend still on the bottom market, and I'm not taking a bullish trade yet. Everybody is partying. Then I want to be part of the party. Alright. Okay. That's it for this morning. I'm gonna keep my session shorter from now on. And I will inject more video if there's anything of substance throughout the day. It's better that way instead of keep mumbling on, right? Okay. So that's it for this morning. Thanks for watching. Remember, prosperity happens never by accident. Okay? You've got to plan it out. Okay? It's accumulation of your plans, and you get your prosperity. Thanks for watching, and talk to everybody soon.